for discount inefficiencies. That's all this stuff here. And when you're new, you don't have the ability to find a trade right away. And before that, you don't even know where it's going. Where can it likely draw to? How do you know that? How do you know when the market's not likely to continue running, as I indicated in here? 1, 2, 3 drives, or in the book Street Smarts, they call it three Indians. Why are they not getting clout chasing police to tell them that they renamed a 3 drives pattern? Right. But there's logic in reading price action like this in a relaxed state where you're not trying to impress anybody, you're not trying to press a button. You're taking information, you're collecting it, and you're observing. You're going to look back at this price run here 3, 4, 5, 6 months from now. If you've done it, if you took the time to go through and look at the observations you make today and make that in your journal. And then when you look at it half a year from now, 6 months from now, next summer, when you're looking at price action, you're going to see so many things that you don't see right now. And it's going to be so obvious to you that it's there, but you can't recognize it right now. And it may be your second or third model that you see. You don't have to have just one. I have models that I work with in markets that are choppy, list type lethargic price action. And I have models that will do very, very well in that. But they won't work well in trending models. If I know the market's likely to trend, I got 3 or 4 models that do very, very well at that. I have models that are focusing on reversals. I have models that trade the market maker buy and sell models. I have models that simply trade intraday volatility, and I'm buying and selling all day long, up, down, up, down, up, down, up, down. That's Enigma. I don't need a bias for that. I don't need long-term draws on it. I don't need anything. I don't need any PD arrays. I don't need any of that stuff for that. But to communicate in a language for you, my children, to understand it, and for anyone that wants to make themselves available to learn it with them, this is the language I've created, so that way you can see it, learn it, and then go into price action using that language, and then you will see what your model is, and it's not me pushing you to it. Think about what we've showed so far. We have the optimal trade entry, which was the longest running flagship setup on my YouTube channel. And then you had my daughter's model 2022. Then you had Silver Bullet, which is Cameron's model. And now you're seeing that the new day opening gap, new week opening gap with a fair value gap, the first presentation of that, that's Caleb's model. So Silver Bullet's always there. Every single day, Silver Bullet's there. I've seen a couple people putting videos out saying it don't work anymore. They changed it. Again, I don't want to have the conversations anymore because, number one, it's obviously discounted, and you can discard that logic by simply going in with the right way of looking at what it's doing. But they want it to be perfectly easy. And because they can't do it, they want to put the message out there because that way their followers don't expect them to try to be able to do it effectively because they're saying it's changed. It's not changed. Nothing's changed. The date is changing. Your calendar date is changing. The logic of making these markets go up and down, that's never changing. And you should be comfortable accepting that. It doesn't mean that you're going to be able to engage with price action every single day with your model. You might see a setup form and you might second guess it and not take it, and it runs. How are you going to feel about that, Caleb? Are you going to be mad that you doubted yourself and then it ran and you could have made money? You could have done something to impress dad. You could have said, look at this, dad, but you didn't do anything. And now you're thinking, I don't have anything to show him. And I'm releasing that for you right now. You do not do that. What's impressive to me is you didn't feel comfortable taking the trade, even though you saw it. You didn't feel comfortable with it. Something about it didn't feel right, and you didn't press into it. You've monitored price, and it delivered. The takeaway is you controlled yourself. You didn't break the model. You didn't chase price after it started moving after your model spoke. That's what I'm impressed by. I'm impressed by that you saw that it was there. I'm impressed by that. That's normal progress. That's the thing that you should be focusing on. But unfortunately, We as humans, we do not want to see it like that. We look at it as we missed money, we missed an opportunity, and I'm an idiot because I couldn't take my model and execute on it. And you beat yourself up verbally. You're driving to and from work thinking about what you could have did right versus the things I'm telling you that dad sees that you will be doing right and I'm pleased by. Because that's the stuff that keeps you in this industry long enough for you to get the experience to be consistently profitable. And the experience that you glean over time will help you ferret out, picking the right ones that you want to be a part of. There's going to be times when your model is going to say, yep, it's a time to trade. It's there. And you're going to say, you know what? The daily chart, what it's been doing, what we got in that calendar later today or later in the week, I'm not touching this one. I'm just going to watch it. And if it moves, great. I'm entertained by that. It just gives me one more little nudge of assurity that I know what I'm doing and what I'm looking for. But if you make every fluctuation and every single time you sit in front of charts about making money before you know how to make money, you're going to lose money. And that will repeat all the time. And the only thing you're going to get from that is regret, toxic what-if thinking, and you're going to be fearful to take setups in the future. You're going to be fearful that it won't work because you are forcing inexperience to deliver Olympic feat results, and that doesn't ever work. It never works. So when dad tells you this, relax, don't look for these things to be, I have to show that I can call it when it got to the right fair value gap and it went to where I thought it was going to go. That will come. I know that will come. But that will come as a result of you doing this. Relax. Watch price. It reaches to the levels we understand. We are looking for it to gravitate. How did you feel as price was dropping down there? Some of you watching that are eavesdropping in our conversation here. You've been invited nonetheless, but you're still eavesdropping. How did you feel as price was dropping? Did you think, wow, I can't drop any more than that? Oh, it's probably done. It's probably done now. It's going to start going up. Did you have any moments like that? There are wonderful opportunities to go in and annotate that's what you thought was happening at the time. And then study what price actually did. What signatures were there to indicate that nothing had changed. Nothing changed. We went down and stopped with the bodies here. We went outside of the new week opening gap, right into a up close candle. That right there, that little retracement, and then break down right there. As soon as you cross over that, that's another indication that liquidity is being offered to the downside. That means we're still in a sell program. That means that sell side is still the mode of delivery, lower prices, in other words. And the market just simply goes right back up to that one more time. When anybody looking at this, maybe if you put an indicator like RSI or CCI or a MACD, any kind of momentum indicator, I bet you that there is some measure of bullish divergence with these lows. And if you're watching indicators like that, stochastic, something to that effect, you get tricked into thinking, okay, it's done. Look how much it's moved. So when you start seeing divergence in momentum indicators like that, then, oh, it's definitely done. And I lost so much money doing that in 1992, 1993, 1994, trading with divergences, thinking that it's done because it's divergence. I mean, it has to follow what the indicator says, right? And it doesn't. It doesn't respect it at all. Okay, but if you start looking for trend following type 2 divergences, that means on your momentum indicator, if you look at the high here and the high that's made in your indicator, I'm telling you how to use retail logic with my stuff behind it. My stuff makes your retail stuff work because this is the market. And it's going to sound very condescending and arrogant. Did you just hear this guy? Yeah, I said what I said. Go back and rewind, didn't listen to it. But the short-term high here and this lower high here, you're going to see your momentum indicators are going to have a higher high reading here versus that one. And that's a type 2 trend following, or what is called as a hidden divergence. And Nick Van Nice was the author and creator, and he's the one that gave it to the trading industry. It was not George Lane. And George Lane didn't invent stochastics. Okay, so these are all things that are promoted in books, and because people hear it and they read in other books, they think, well, that's the history. This is what it really was. And you don't know anything when you have that stuff. And that's what you're seeing. You're seeing a wave of smart money concept books being written by clueless individuals on Amazon, trying to get their little mark in history. And they're just basically going to be a shit stain in the underwear of trading. They're literally out there making fools of themselves. Because when the real logic is shared, it's going to be a glaring, obvious spotlight placed on their ignorance. But it's a cash grab. They got to pay their credit cards off. They got student debt. I get it. You got to pay your bills. I got it. But you're not going to be a pillar in the industry. You're not going to be a giant. No one's going to care about your book because it's going to be toilet paper. And rushing to do things like that versus sitting down with a notepad, listening to the old man. Listen to me. My goal is for you to do well and learn it correctly. Casper SMC. Young man, I think you probably put more ICT content out than anybody else besides myself. And you've recently made a video, like all the ICT trade setups in 19 minutes. You're teaching something in your diagram, the change in the state of delivery, you have that on the lowest down close candle. That's wrong. It needs to be on the highest succession down close candle. So that's wrong. And even in your diagram, you can see prices go right to the opening price of the second highest down close candle. That's the change in the state of delivery. Okay, that's the order block. So fix that, re-upload your video or make a overlay and correct yourself because that's not right. But I was going to leave a comment, but I thought that would be rude. But this way, everybody can go and watch you and get some ad revenue off of it. But correct it because it's not right. So the main takeaway is for the lecture today is for you to slow down, observe price. When it's not obvious and your model's not speaking to you, Caleb, don't force anything. Don't try to reverse it. Don't try to force a setup. Don't try to chase something else. Don't reach for another PD array of dad. Oh, I can't find my model today, so I'm going to trade order blocks, or I'm going to trade optimal trade entry, or I'm going to use something else. Don't do that. That's one of the biggest things that my paid students made the mistake of trying to do. They don't have the wherewithal to stick with the model. And that means being comfortable with their model not giving them a setup today. It's not an everyday make money. When you're brand new and you don't know what you're doing, that is not the right mindset. And people that tell you that, they're fools. They're absolute fools. And if they get lucky to force something in those environments, what they have done is they've rewarded bad thinking. They've rewarded impulsiveness. And that's exactly what a gambler feels when he goes to the casino and he thinks he's lucky. And he goes home without money. He goes home with regret. But guess what? He's going to get comped a free room so he can go back out there again and give them more money. And he's going to take that as that's an indication that the universe is telling me I'm lucky. Look at this. They gave me a really good comp. And I even got a show ticket too. I got to fly out there again. Not realizing that they haven't made any changes that's going to make them better at gambling. They just think that everything's going to work out for them. And that's exactly what people do when they're watching price action. They zone out like a deer in headlights and they think, well, my model's not here, so what else do I do? You sit still and you log how difficult it was for you to sit still. And at the end of the day, you didn't lose money. That's the win. That's the takeaway. You're never going to hear profitable traders that teach emphasize the importance of that. You're not going to hear it because it's all about getting into a move so that way you can high five each other. Look at my certificate. I got a funded account. Look at my payout. High five. That's what it's about. The engagement traffic about how I have lots of people that are making money. I have lots of people passing funded accounts. I have lots of people getting payouts. I have lots of people trading real money accounts. And that's going on all day long, all the time. But I'm not cheerleading that. The folks that come here, while that might be great for them, that they are making money, there's nothing that they can do by seeing someone else's success like that. It might inspire you, like, wow, I want to be able to do that too. But I'm going to tell you the real behind the scenes feelings are. I can't get there, and I want to rush to get to that. That's what always happens. My students that have been honest, when they see other people in our groups be successful and they made money, it's almost like resentment. It's resentment. And it's easy to see why my community, the people that follow me, are the most abrasive and called toxic because they're so in a race to keep up with the ones that are successful in my community. And when they can't get there as fast as they want to, they become very toxic and critical of everything. And it stems from not doing what I'm teaching this week. You have to relax. My results are not your results. You've never seen someone outline a $200,000 trade live ever. You've never seen that before, but you've seen it Friday. You saw that Friday. But there's some people that say it doesn't work. He called both sides of the market. No, I did not. I did not. But you that are demanding, I need to know every day. I need to know the right ones that work only when it makes me money. And I need to know how to use a stop loss that's never going to get hit. If you have that framework right now, this is the week that you want to spend the most time in. Because you have a lot of character flaws that are going to, and they're normal. Don't get me wrong. I'm not trying to beat anybody up that thinks like this. And I'm not trying to make you feel stupid. It's an opportunity to recalibrate or to initially calibrate yourself with the right mindset. Because if you go into trading with these things in your head that you're putting so much emphasis on, my model has to be executed every single day. I have to make money every single day. I got to be able to see my model when it presents itself. You might have a model of choosing, and it might not be this one here that I have for Caleb. You might see a day where you didn't see it form, and then it starts running. Oh, I missed it. You know what that is? That's progress. But it isn't going to feel like progress when you first do it. It's going to feel like you failed. And you're going to feel like, I don't want anybody to ask me how I did today. I don't want to go on social media. I'm not going to talk. I'm not leaving comments on my favorite friends. Because if I stay under the radar, they're never going to ask me, how was your day today? And you don't want to have to lie, but you will, forced into a corner. You're going to say, yeah, my model did this. I did this. My model gave this many points. Okay. But that's not trading it. And you know that. And now what you just laid down scar tissue. You inflicted wounds on yourself. Your ego and your intellect has now been bruised. You did something with a transaction with people that don't care about you. They don't care about you. If you make money, they don't care. If you lose money, they're going to be there to laugh about it. But after that, they're done. They're looking for something else because it's all stimuli. So you have to have the right perspective of what you're doing, why you're doing it. The outcome is not the goal. The process and following that process, that is the goal. Because if you do those things correctly, the results will do what they're supposed to do. Keep stacking up in positive the column. But if you don't have the right mindset going in and observing, okay, there's nothing for me to do right now, so sit still and be okay and be comfortable knowing that that's fine. That's realistic for you to feel, well, I'm looking for something and it might not present itself today. Or you just aren't on your game today. You're not dialed in. And it runs and it doesn't do anything to get you in. That's wonderful. You didn't lose money. That's someone with 32 years of experience telling you that that's okay. It's good. It's good for you to not have lost money doing things that were silly. But if you've ever traded with real money, how many times have you done silly things like that? And you knew, wow, I wish I could just go back in time. I knew it wasn't anything in the market. I just gave into that impulsiveness. I just want to push the button. And guess what? Women tend to do that less. Now, I do have students that are female that have admitted that they've done that, but not to the degree that men do. I have so many students over the last 20 years that it's almost like the same person's writing them. They're not. I've received payments from a lot of them and they're not the same person. And their initial stages were very similar. I don't even know why I pushed the button. I sat there. I don't know if it was being bored or what it was. I just felt like something came over me and I just pushed the button to get in. And I knew as soon as I pushed it, I should have never done it. But then it started working in my favor. I was like, well, wow, it's really doing something. And then it comes back on them. And they lost money. And then you're losing money when you follow your model. It's measured risk. And it's something that you should be comfortable with if you lose. If you're not ready to accept that, and I'm going to repeat it again because it probably went right over your head. If you're not ready to follow a model, trust that this is the framework in which you're going to engage price, Place a stop loss, a real stop loss, not a two-handle stop loss, something that's reasonable that based on the structure in the marketplace you're engaging with. It's reasonable for it to fluctuate around, but if it goes to that stop, you're definitely wrong. That's why most people don't want to use a stop loss, because what are they doing? They're defining a moment in price where they're wrong. And that just cut real deep right now, didn't it? You're uncomfortable. You want to turn the video off. You want to stop watching the stream right now because I just pushed you into a corner like a bully and said, give me your fucking lunch money. But you got to recognize that. You got to say, you know what? That's true. So that's an opportunity. How can I correct that? Well, I'm glad you asked. You have to learn how to read price action and know what your model is suggesting is likely to occur in price. And you cannot figure that out by watching my videos. You're just getting familiar with it. But you have to watch price action. You have to study it. You have to back test it. You have to log it and get comfortable seeing it many, many, many times. I take losing trades, folks. It's going to happen to you too. But I don't go into a market and think, man, what if I get stopped out? All this stuff's going to go out the window if this trade fails. If this one stops me out, I might as well just throw all this stuff away and just start trading Bollinger Bands. That's never going to happen. But the point is when you're forced to come to the root decision-making catalysts of using a stop loss, a trader without a model, without experience, that should not be trading with real money yet, to implement and use a stop loss, which is what you always should do. You should never be trading without a stop loss, ever. I don't care what anybody tells you. You're an idiot if you're trading without a stop loss. You're literally saying, I don't care how much it wants to hurt me. I'm here for it. That's what you're saying. And that's not somebody that's managing risk right. And that to me is crazy. But if you're saying to yourself, I'm going to implement a stop loss on my trade using the model that I'm trying to engage price with, I'm placing my stop at this price level, whatever it is. When you do that, you're essentially saying, I am wrong if it goes here. And I'm okay with being wrong. And I'm okay paying for this experience. I'm going to college in this trade. I'm going to a seminar that I had to pay a fee for, listening to a professional, okay? You're using the same logic there. It's costing you something. But that stop loss is doing a whole lot more, isn't it? It's defining the very moment that you as a man or woman, a trader in the pursuit of success, that you're wrong. And some of you think that you're going to be the person that never does it wrong. So how do you avoid it? Don't use a stop loss. I'm never wrong then. But you're always blowing out. You're always failing your challenges, and you're always losing your funded account. That's what keeps happening because you don't want to use a stop loss. You don't want to admit that you're wrong about that trade idea, and you don't want to use a leverage that is reasonable. That if you do get stopped out, yeah, you're wrong on that trade, and it didn't take more from you, so you can still take another one that could yield easily 3 to 4, 10 times what you just took as a stop loss. But you're not thinking that way initially. You're thinking, I'm going to make money. I want to get a payout. I want to pass the funded account challenge. I want to show everybody my certificate. I want to get handshakes from everybody and attaboys and attagirls on social media. That's what you're trading for. Versus, I want to protect my equity. I want to be in this longer than just today or next week or this month or this summer or this year. And my goals are, I want to be able to replace my income. I want to be able to pay my car note every month on this. I want to be able to pay grocery bill. Not, I want somebody else to tell me I'm doing good. Because doing things in trading for those types of results, you're going to break rules. You're not going to follow your model. You're going to over leverage because you're trying to impress. And I don't want you thinking like that, Caleb. That's why your rules are, you can only trade with one contract. That's why you're going to be trading with a micro contract first. Because you're not trying to impress me with how much you're making. I got plenty of money. You know that. I ain't impressed by money. I'm impressed by skill set, following rules, and being responsible and honest with what you're trying to do. So when you get stopped out, when you start trading, I'm not going to ever look at you and say, what a failure. I'm going to be thankful that you used the stop loss. I'm going to be thankful that you at that moment decided that you are wrong and you're comfortable in your own skin at that moment should you be stopped out. And it doesn't take enough to hurt you. It doesn't change your trust in the model. It doesn't take enough from the account that you can't take another trade. You see what I'm forming for you, son? I'm giving you a shield first. Because if you have a really good shield and you can stand on your own 2 feet, the market can slap you around a lot. And you can take a lot of those shots and you're still there. You haven't got your sword and spear yet. You haven't got that stage yet, okay? You're just learning how to stay on your 2 feet and hold that fucking sword later on to stab it in its heart. Right now, you just have to hold on to that shield and keep yourself in the game. By doing it that way, you're learning more about your footing. You're learning about how you have to navigate and parry when the market does things you didn't expect. You're still in it. It doesn't change and wreck your whole perspective on, I'm never going to get it. And that's what happens with everybody. Everybody feels that initially. No one has ever walked out there and had straight success and they never doubted whether they're going to be able to do this consistently. No one's not ever had that moment of doubt. And the more you involve yourself initially with trying to chase the money, the sooner that moment's going to come. And you don't have enough experience to say, that's not realistic for me to think that way. But while you're at work, when you're with your girlfriend and your boyfriend, when you're eating, you're going to be disgusted because you're thinking that way. And that's going to consume that private time that you're away from the market. You're going to be obsessively thinking about the market. And what are you going to be obsessively thinking about? How good you've been trading? No, you're going to think about the things that you are doing wrong. And you're laying down more scar tissue. And it's going to make it harder for you to learn how to do this thinking that way. Once you have scar tissue, that's toxic thinking. That means you're fearful of the outcome of the trade. You're fearful of the model working for you, and you want to stop using that model. And it's going to be easier for you. It's going to be painless for you to just say, I'm not using this one. It doesn't work for me. I want to use something else. Or you'll take a leap and completely say, I don't want to even use any of this logic. Give me an indicator. And you're hiding from the root cause that you are not doing what you're supposed to be doing. You're not sticking to a process. You haven't formed a model that you can stay with to see the results are there. I literally could flip a coin. Heads I'll buy, tails I'll sell. The first return to the opening range gap. And if I'm not risking but 1/4%, by the end of the year, that's profitable. That's a challenge for someone to run the numbers on it. Use your system tester to do that. Rewind it, listen to the logic. It's simple. Use the other end of the opening range as your stop loss. At the end of the year, you're making money. I just gave you something that's completely mechanical. Literally completely mechanical. It doesn't even have a bias. It's simple. But that's demanding too much of you. Just like staying on the right side of the road is too demanding for most people. Just like the sign that says, don't go faster than the speed limit. They're not suggestions, that's the law. But I break the law a lot. I want to see how fast I can get above that speed limit from a red light. If I have nobody in front of me and it's open road, my cars sometimes get asked to do things that they legally are not allowed to do. But I'm not doing that on 95, trying to be speed racer and risk everybody's lives and my own personal property. I know that that stop loss might get hit. I manage the risk there. But if I'm on a back road and it's a straight shot, it's all farmland, worst thing can happen is a deer jumps in front of me, and that would suck. So everything has to be measured in risk. And you're gravitating towards understanding how to define that risk. But you're doing it in a way where you're not focusing on the results of monetary wins or losses. That's not the report card. We're not even there yet. We're not there yet for you. And seeing a move that, I could have made. No, don't. If you say I could have, you just replace it. Well, I don't need to do that right now. I didn't need to do it right now. That's how you replace that logic. And it's a way of replacing and recalibrating your mindset about the outcomes. You're rushing to get to I am profitable and I'm going to be able to go out and make more money today in the afternoon. I'll go out there and do it tomorrow because I have a model. Until you get good at trusting the model and identifying it, that part's never going to be there. And people don't put themselves through the proper time required to get to that mindset. And that's why they system hop. That's why I system hop as a young man. I have no shame in the game telling you that's exactly what was going on in my mind, because I wanted immediate results. I wanted immediate feedback that it works all the time. All the time. I wanted everything to be perfect and easy and fast for me. And that's why I talk to all of you that are listening in that mindset, in that delivery of criticism, because I went through the same thing. I'm not trying to talk down to you like I didn't go through it. I went through the same stuff. I just didn't have somebody trying to kick me in the rear end and say, this is wrong. I had to lose a lot of money many times to learn the lessons that I'm doing this wrong, because I kept repeating the same stuff, expecting a different result. And some of you simply want to go through the same things I went through because it's like we're sitting around. Like, remember, I've used this before. I love the movie Jaws, the original one. And Roy Schneider and the two other guys are sitting on, and they start comparing their scars, how they got hurt. And like, oh yeah, look at this one. That's typical of men. That's a classic man thing. Try to one up the next guy. Oh, you did that? Well, look at mine. I got some. Or you know the guy. You're the guy, or you have a friend that's always done something bigger, faster, better. That's a man characteristic. You don't see that in women. That's why they're better traders. That's why they're better traders. They focus on what they got to do. What do I got to do? How do I do it? And leave everything else extra out of it. And when they get there, they're not parading it around like a peacock. Peacocks, it's a male thing. I'm open. I tell you, that's what I do. I go over to my wife and say, look what I did. Woohoo! You know who you're married to, woman? Look at this. You get all this. All this is yours, girl. High five, that's right. But you want to go through it sometimes. Most of you men, you want to go through that same process. I came through a battlefield, ICT. It was just like you, brother. Yeah, I went through the same stuff. Why? When I talk like this and I teach this way, it's the intended purpose for you to avoid it. You become better by not going through those things. I can recognize that some of you will be smarter than I am and say, you know what? This man was honest enough to say where his shortcomings are, what he focused on too much early on that caused him to make this learning curve longer, taking more time than it's necessary, trying to do stupid things instead of just saying, these are rules, these are the model parameters I got to operate in. This is the time it's going to be there, or it's not going to be there. If it's not going to be there, guess what? I didn't lose any money, and I've gained more experience. I've bolstered the confidence in myself that I didn't recklessly plunge ahead without doing a model. I didn't go in impulsively and just chase price action. And I didn't execute and pay commissions on a losing trade on top of it. That's all winning. That's winning. Because cost of trading, if you're reckless and you just go nuts, you can have trades that mathematically look profitable. But because you've over leveraged and traded so much, the commission costs and fees eat it all up. And there's so many people that don't realize that until they start doing it. Yeah, man, my trades add up to $1,000 today. I mean, $1,000. Yeah, what'd you pay in commission? Well, I had to pay $1,200 in commission because I traded a lot. But that's all right. I made $1,000. No, you didn't. No, you didn't. You spent $1,200. And now you have less money in your account. That's not a winning day. When's the last time your mentor told you that? That's the reality of trading. Without a model, without rules, commission costs and fees are like piranha. They're just waiting for you to get into the marketplace because they're getting those commission costs and fees, whether you make money or not. So you have to only engage when it's more likely that you're going to see your model pan out. watch the buy side here. Note that one, okay? Just for the PM session. So even if it wants to go lower, I'd like to see it trade up there, bump that, because that would be where anybody short would have trailed their stop loss. But I've went over today a little bit more than I wanted to. I wanted to try to keep it at like 10:30. But these lectures are meant to calibrate your mindset, Caleb, to remind you what you're doing, to avoid chasing things that are not important right now. That's the main takeaway, is because if you go in thinking, unlike the things I'm trying to shape your mindset around, focusing on the important things and filtering out all the other stuff, it's going to be harder for you to learn this and also to be comfortable in your own skin. If you don't want to listen to these lectures, I promise the outcome is going to be this, and I mean this entirely. It won't be for Caleb because I'm going to put him through the woodshed. He's going to have to do this, and this is the way it is. But for all of you listening, the outcome is going to be, this doesn't work. There's too many moving parts. I don't like it. It doesn't work because it doesn't give me enough trades. If you have one good trade a week, you have more than 99% of retail traders, because they have no idea what they're doing, but they're taking lots of trades. So having more of a frequency of trade that's not a plus for anyone that doesn't know how to trade. Unless you know how to do something really, really well that you can wait all week for. All week. One of the exercises I forced myself is I had to take a time-based trade on a Friday in the PM session. That means I was not allowing myself to take any setups while I watched price. Lots of opportunities, and it was agonizing for me. I wanted to push the button on everything. But to teach myself patience and self-control, which I needed a lot of. In the beginning, I didn't have that. I was like a cowboy, literally just gunslinging everything. Buy, 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 buy. If Kramer would have been around then, I would have been broke faster. But Kramer's a guy on CNBC. He's a perfect indicator. When he says something's going up, it's going down. And, just look at his data. It's crazy. But I had to force myself to don't trade until the afternoon session. That means 2 o'clock to 4 o'clock. On that Friday, that was the only time I could take a trade. And every single day, it was like my skin was crawling. I was going through withdrawal, like, man, like I don't know if I can do this. And so many times I would have my platform opened up thinking, okay, I'm going to call the broker in. I'm going to put this trade on. I'm watching Metastock. That was my play. That was my trading view chart program, Metastock. And I had super charts. I had TradeStation. And it was very, very hard for me to sit still. And to be honest with you, sometimes I gave in. And guess what happened? I would lose. And that loss was multiplied so many times over because I did not listen to the rules. I crossed the yellow line, I went over the speed limit, and I drove under the influence of greed. So should I be surprised that I wrecked? I shouldn't be, but I was at the time like, how'd this happen? How could this happen to me? I didn't deserve that. Yes, you did, Michael. You didn't follow the rules. You impulsively traded. You were supposed to wait until Friday, the afternoon session, between 2 o'clock and 4 o'clock, because you're not controlling yourself. You don't have self-control, and you're trading impulsively. So I had to force myself with these things. Maybe it's not that extreme for you. Maybe you're thinking that you're exempt from that. Okay. Well, what are you going to do to overcome that impulsive nature? It's only fixed by doing less and growing comfortable with less. And I found that I could do one trade in the bond market, and that one trade in the bond market could yield me more than my whole monthly income. And I'm like, wow, this is a whole lot less than I thought it was going to require. And that was an astonishing moment for me. It was an epiphany where I thought you had to trade every single day because the markets are trading. I got to find a trade. And I realized that less is more. Less is less to worry about. If you have 4 trades a month, your commissions are going to be the lowest it can be. I mean, think about it. Your commission costs are going to be extremely light. And if you're profitable, wow, your net profitability is through the roof. But no one's telling you that as educators. No one's telling you that. They're telling you, go, 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 baby. And all these funding account companies, they love it because that's more commission costs or fees that they're collecting, and more likely you're going to blow the account and then start up all over again. And I'm telling you, Caleb, you're not feeding them that. You're not fattening their wallets. You're going in just enough to take what you need. That's it. They'll make a little bit of money off of you. That's a given. But you're only in there to make a couple grand. Once you get to $5,000, that $5,000 is going to come out of there, and you will never open up another transaction with that funded account company ever again. And that $5,000 is going to go into AMP Global. And AMP Global, you're going to trade a micro contract, and you're going to build that up slowly until you can get to one standard lot. How are you going to know when you can trade one standard lot? When you're trading with 1.5 times the full exchange margin. Man, that's going to take, I don't care what anybody else says about how long it's going to take. You're in this to have a career. You're going to get bored with doing this. So that way, when you are trading with the standard lot, you're going to be making more than everybody else out there that's going to criticize if you give them a stage for it. They're going to be working their jobs when you're making doctor salaries in a month. They're going to be regretting not doing the things that you're going through when you're making more money than they ever imagined. They'll still be where they're at. Toxic thinking, being critical of other people, when you have done the work. And when you take trades, you're not going to be anxious. You're not going to be worrying about if you get stopped out, because the leverage that you're using is the minimum. And the risk you're placing on the trade cannot take your account from you. And when you have one winning trade for the day, you're done. If you have a losing trade, you're done. There's no question, there's no conversation, there's no doubts about it. This is the way it is. And you will make millions of dollars as a result of that. It just takes the time element that nobody else wants to put themselves through. They don't want to go through this process of forging ahead with the right mindset and slow and steady, giving yourself a chance to understand yourself and how you're going to derail yourself. Because it's my rules that you're following. Those rules will keep you from derailing. You cannot blow that account. Trading like that, you absolutely cannot blow the account. It's not possible. But invite more than one trade a day. And invite trading with a standard lot versus a micro before you're able to really afford it. Because with AMP Global, you can trade a standard lot with $300. And that is reckless. So many people have gone into very, very low commission brokers. I'm gonna be honest with you. I've let the live account be pushed with the expectations of my children to show them the results of money going up, money going down. And they've watched that. And to see them smile and think, wow, when it was real money in profit, and then watching their face when, yeah, that was a real $8,000 loss. And they're like, $8,000, wow. Yeah, it's sobering, isn't it? But see, when you go in, you're thinking that it's always going to be perfect. And you're shielding yourself and putting blinders on, thinking it's not going to be that way for you. You're going to do it differently, and you'll be able to walk through, and it'll just be easy. You're lying to yourself, and you're filling yourself up with expectations that can't be met. So you're making trading harder than it needs to be. You're making learning how to trade harder than it needs to be. Versus finding comfort and fun